Well, when you look at the headline figure, it seems encouraging, you know, a slightly up in the third quarter. But if you drill down into the report, consumer confidence remains at levels last witnessed at the onset of the global financial crisis in the second half of 2008. Your feeling on what's actually come through today?
A very small retracement. These things never go in a straight line. The decline in the first quarter in the second quarter was much bigger than what perhaps was warranted at the time. But the downward sloping channel that we have developed for the last 2 years, where the confidence levels were as high as +15, which is a very comfortable majority of people expressing themselves positively. We now basically have a small majority negatively expressing. The difference between how they see their own finances compared to the economy is much bigger. The economy is seen substantially negative, while their own finances for the majority of people is still positive. So that gives a different reading on the situation.
Yeah.
If you look at the country analysis, people, when you ask people 3 questions: how do you think the country's doing? How are your own finances? And would you buy fridges and microwaves? In other words, would you buy durable goods? The country one is very interesting. Was this survey conducted before or after Marikana?
The survey straddled Marikana, and I very much expect that especially the negative reading on the economy was influenced not only by the European crisis, which has been the story of the year, but then specifically in the third quarter also by these events locally in the mining industry.
But this is a picture that's probably going to deteriorate even further now that we've had this, you know, problem and woes plague the sector and persist. One would assume the picture not looking too rosy for the fourth quarter.
Well, certainly the economic data going to come out in coming months is going to be affected by the events that lie behind us. And that obviously will send a negative signal to many consumers. So when we do the next survey, somewhere in early November, then I would expect the index to resume its downward trend.
Yeah, just looking at it, Cees, how do you explain the disconnect? Because it seems when it comes to the economic outlook, most consumers continue to expect the situation to deteriorate or worsen over the next 12 months. But when it comes to their own financial position, as you alluded to, they see an improvement.
That is a traditional thing, that your own finances is one thing, but whatever bad is going to happen to the neighbors. And that is something that goes through boom and bust. For me, it is the own finances question which is the most important one. And there I also happen to think that there is quite a distinction, I think, between those who say they are positive and many of those who say they are negative. Those who are positive are basically comfortable off, and many of them are probably doing well in terms of income and assets, compared to a very large number of people who are not doing very well and who populate the negative responses. But on balance, we have still a majority of people expressing themselves positively.
And Cees, you also mentioned that a lot of that might have been to do with the fall in food prices, but again you point out, just to temper that enthusiasm, that the food prices are going to be impacted to the upside by what's happening in the United States of America. Is that a real factor when people go out shopping and they say, well, this has actually gone up since I last bought it? Does that make them respond negatively?
I think the interest rate cut in July was more important for own finances perking up. But yes, looking forward, I think everyone is very much aware of what's going to come on the food side. So that's a negative one ahead of us. And of course also on the petrol side, the news has not been good. So these are substantial negatives that still are going to make themselves felt.
Interest rate cut, you mentioned. What's your forecast for what we should be anticipating out of Governor Joe Marcus come this Thursday?
They have lowered interest rates to 40-year lows. They have done it very much with both the inflation performance and the economy's performance in mind. And although, of course, the economic performance might still deteriorate some more from the expectations that we have been having, it is happening for very specific reasons related to labor and the mining industry, expectations generally, something I don't think the governor can do too much about. While at the same time, then the outlook for inflation is not necessarily for better news. If anything, we're going to see a bit of a hiccup there from the last number of 4.9 back into the 5 to 6% range over the next 12 months. And that is an even balanced view. Also internationally, a lot is being done by the Federal Reserve and the ECB, and emerging market central banks seem to be holding back now after many of them having given cuts. So for me, I think we are on a sideways movement, and certainly I think we want to get December out of the way politically before anything is done.
Cees, I like looking at the historical context of these numbers. We talked, Alishia told us in the beginning, +5 in the first quarter, a big fall to -3 in the second quarter, stabilisation now to almost 50-50, -1. But if you look back, as you quite rightly pointed out, 2010 was the high of the Consumer Confidence Index at +15. But the average since democracy, since 1994, has been +6. So we're still way, way off the average, aren't we?
That average, yes. But if you go way back in time, you essentially now find us at the levels that we were in 2000, 2001, 2002, 2003. Now, you may remember we came out of the Asian crisis, but the growth performance, our growth performance was not particularly impressive. It was the 2.8–3% range. Effectively, we find ourselves back into that territory, but now with the growth numbers actually deteriorating. So under these circumstances, and given everything that we have said so far, yes, my expectation is that this index will deteriorate further in coming quarters, and that just happens to be a reflection of everything that has been happening.
Okay, so let's leave it there. Thanks so much for joining us. Always a pleasure having you in studio. Cees Bruggemans is Chief Economist at FNB.